So I originally did not plan on making this video. However, now that the exact same YouTubers who were just AI experts a few weeks ago are now all of a sudden banking experts, well, I decided to go ahead and make this video to one, provide a simple explanation of what the heck happened, and two, also tell you that no, the world is not ending, no, aliens are not going to invade and destroy you, and no, we're not all going to die just because Silicon Valley Bank collapsed. So what exactly is Silicon Valley Bank? Well, SVB, which is short for Silicon Valley Bank, is a publicly traded bank based out of Santa Clara, California, which is the heart of Silicon Valley. Now, SVB is known for working with almost half of all of the venture capital backed startups in the United States. So this event will for sure have a major impact on Silicon Valley. Okay, so what happened? Well, SVB was holding a high number of bonds that they bought more than a year ago. And like other banks, they kept a small amount of deposits on hand and invested the rest of that money with the hope of earning a return, just like most of the other banks do. But as interest rates rose, those bonds became less valuable and the bank needed to recoup the losses that it had made. This led SVB to disclose that it has sold a large chunk of its securities worth $21 billion at a loss of about $1.8 billion. And so in a letter from the CEO, Greg Becker, Silicon Valley Bank reported that it was seeking to raise capital in the amount of $2.25 billion via a stock sale in order to raise money. This disclosure sparked panic among tech investors and company founders who then urged, mostly on Twitter, for startups to withdraw all of their money, which then triggered an event known as a bank run. Now, a bank run is when too many customers withdraw all of their money simultaneously, all at the same time, from their deposit accounts with a banking institution over fear that the institution is or might become insolvent. This situation occurs mainly in fractional reserve banking systems where banks only maintain a small portion of their assets as cash. As more customers withdraw their money, there is a likelihood, at least more of a likelihood, of a default. And this will trigger more withdrawals to a point where the bank completely runs out of cash. That is essentially what happened to Silicon Valley Bank. Now, investors and depositors tried to withdraw $42 billion in deposits this past Thursday. That left the bank with a negative cash balance of nearly $1 billion on Thursday, according to court documents. Now, on Friday, the FDIC did announce that they were taking over about $175 billion in customer accounts, and they are now tasked with returning the money to the bank's customers. However, there's a problem. More than 85% of the bank's deposits were uninsured, according to estimates in a recent regulatory filing. This is because the FDIC deposit insurance is meant for everyday bank customers and maxes out at $250,000. Many of Silicon Valley startups had millions or even hundreds of millions of dollars deposited at the bank, and as of right now, nobody is sure how much of that cash is left. And this is where the further chaos sets in. Because at the current moment, all of the uninsured money can't be accessed and likely will have to be released in an orderly process. However, this orderly process could take several weeks, but that's the problem. Many businesses can't wait several weeks to get access to funds because they still have to meet their payroll and office expense obligations. Bills don't stop just because crises are happening, right? Which means that if this issue isn't solved very soon, it could further escalate into furloughs or layoffs. The other serious concern is that as of right now, there is nobody out there willing to buy Silicon Valley Bank. Typically in this situation, bank regulators look for a stronger bank to take on the assets of a failing bank. However, in this case, so far, no other bank has stepped forward to buy Silicon Valley Bank. So now this leads up to the big question. Could the failure of Silicon Valley Bank lead to a repeat of what happened in 2008, which is what I'm saying a whole bunch of YouTubers talk about? Well, in my opinion, the answer is no. In my personal opinion, I think no, this is not going to lead to another 2008. I think it's really important to understand that although Silicon Valley Bank was the 16th largest bank in the US, they were also very unique in the fact that they mostly serviced venture capital-backed companies and tech startups. And so it's important to keep in mind that SVB did a lot of work with a particular part of the economy that has also been very hit hard in the past year. They've been absolutely wrecked and destroyed. So it's very important to keep that in mind before you start saying that, oh, this is another 2008 moment. You know, I'm sure that there'll be other issues arising from this bank collapse. Don't get me wrong, but I honestly, truly don't see this being a sign that we could potentially see a repeat of exactly what happened in 2008. I think anybody that's saying that is a little out of their mind. So yeah, just be careful with all these crazy people online trying to fearmonger you to death for views. Oh my God, this happened. Oh my God, that happened. It's going to affect your stocks. The stock crash is here. Do this now. Be very careful with people that have that in their title, because honestly, they're just trying to get you to click on the video so they could get views. The honest truth is this a serious situation? Yes, this is a very serious situation. There's no doubt about it. But that doesn't mean that 2008 is going to happen again. That doesn't mean that everything's going to crash. And yes, you may see a short-term crash in stocks, but in my opinion, it's just a buying opportunity. The entire stock market is not going to collapse because some bank that mostly takes deposits from startups and venture capitalist place firms, that doesn't mean that the entire world is going to crash over that stuff. So yeah, just be careful with those fear-mongering people. Try and separate real news from people who just always have something doom and gloom or negative to say every single day just so they could get you to click. And yeah, you'll be okay. So in terms of what I'm personally doing, Monday, I'll be buying stocks. All right, guys, thanks so much for watching. Take care.